Leaders without borders. Coming soon.
The CPI numbers, or the consumer price inflation for the month of February, has come in at 6.01%, 6.07%, compared to 6.01 in Jan. So it's not looking like a very flattering number. The CNBC-TV18 poll expected it to come at 6. There were other polls, notably the Informist poll, which said 5.9. So you will have to say it's a tad higher than what the street was expecting. That's not a very helpful sign, considering that the February inflation is coming even before the war, and therefore it's a bit of a worry. We will look for other details before we invite our guests. We will be joined in a minute by Nikhil Gupta, the economist from Motilal Oswal Financial Services. We will also be joined by Abhishek Upadhyay, the senior economist, and ICICI Securities PD Anubhuti Sahai, the head South Asia Economic Research at Standard Chartered Bank. And we will also be joined by Madan Sabnavis, of the chief economist at Bank of Baroda. Gentlemen, and Anubhuti, just a minute before I tell you the other numbers that have come in. Like I told you, the overall headline CPI number has come in at 6.07, a tad above everyone's poll, but just a tad. And the food price inflation has come in at 5.85. That was 5.43 in Jan. Again, that would be a spot of bother, though in February of last year, food prices did fall. Then the food price index is down 0.2% on the month. Vegetable index is down 2.6% on the month. Pulses is down 0.1%. So, well, largely it does look like it's core, which again appears to have surprised the market. Let me see if I can give you more numbers before I come to you. Okay. Cereals, 3.95 year-on-year increase. Meat and fish, 7.45 increase. Eggs, 4%, 4.1. Milk products are up 3.8. I'm reading out year-on-year numbers now. Oils and fats, 16.4%. That has always been the problem. Edible oils, and that continues to be good. Edible oils and fats are also up on the month by 0.1%. And of course, year-on-year, it's up about 16.5%. Fruit, 2.26. Vegetables is still up 6.13% year-on-year. But on the month, vegetable index is down 2.6. So that's a positive. Pulses up 3% over the year. But I think pulses month-on-month is down 0.1. Sugar is up 5.4% year-on-year. Well, fuel and light is up 0.9% month-on-month. And well, miscellaneous, I still don't have a core number. Miscellaneous is up 6.5%. So I wouldn't be surprised if we have a slightly sticky core inflation number as well. Okay, that's the big numbers. Housing index is up 0.6% month-on-month. The housing index year-on-year is up 3.57%. Okay, clothing and footwear is up 8.86. That's a little stiff. And clothing index is up 0.7% on the month. So clothing and footwear is rather sharply higher, both month-on-month and year-on-year. Speak about revenge buying, and you can see it here. Let's get our experts. Like I told you, Abhishek, Anubhuti, Madan Sabnavis, and Nikhil Gupta with us. Abhishek, first thoughts? Numbers worse than you thought? 6.07?
So we were at 6%, Latha, so slightly higher. But based on the details you mentioned, I guess the silver lining is that core inflation should be slightly lower than last month at around 5.8%, which is about 10 basis points lower. It is fuel inflation where it appears there's been a sharp...
The Informist calculation. The Informist calculation is 6% core inflation. Now, obviously, that's a calculated number, but their number comes in at 6% compared to 6% in Jan as well. So I suppose it's steady. How does that square with your expectation, Abhishek?
So we were expecting core inflation to be sticky. Based on our calculation, it is slightly lower.
Okay.
And it is and slight upside surprise in the headline has come from fuel inflation, where there has been a 0.9% month-on-month increase, which is a very sharp increase. I don't know the details, but there are segments within fuel, such as firewood chips, etc., which move in large increments occasionally. But overall, inflation print at 6.1 is higher than Jan, which was in many quarters expected to be the peak inflation, right? So, and if you account for the fact that this inflation number doesn't account for the movement in international crude prices, which has happened since the last time those were adjusted in early November. Average, if you look at between early November and now, is around $90 for international crude, which is 10% higher than early November levels.
Okay.
So to that extent, this number is understated by assuming a full price pass-through around 30 basis and core by around 0.5%. So it's a worrying number.
Got that. 6.07, though it's only a tad above our own polled estimate of 6% and the informist estimate of 5.9. It's still slightly worrying that the expectation was it will peak off in Jan, but now a fair bit higher than Jan. Anubhuti, from the numbers I read out, any comments?
The numbers are slightly lower than our expectation, Latha. So we were looking at 6.14. But the whole surprise has come from food, which really doesn't give us too much of comfort. As Abhishek was pointing out, probably any relief on core could have been a better news. But core remains pretty sticky at 5.95, similar to Jan. And we have to see how, if not in March, then how April inflation plays out, because probably the fuel prices are likely to be revised then. At this particular juncture, the under-recovery or the losses which oil companies are making is probably closer to 15 rupees per litre. So the pass-through can be significant. How it gets staggered, where oil prices stabilize, these will be key factors to watch out for. Having said that, I think in the April policy meeting, it's a given now that MPC will have to revise its inflation projection for FY23 higher. That was even acknowledged by the 3 MPC members who spoke last week. And whether it goes to 5% or it goes to 5.5% in one go, that will be extremely crucial to watch out for. Definitely not a good number, 6%, and really don't see much of a respite going forward, that there is a lot of impending price increases which is yet to be passed on to the economy. Okay,
so you're expecting FY23 to be revised by the RBI up to 5 or even 5.5. Well, today we had a shocker forecast from Nomura saying that they're expecting 6.3, but that is on the assumption of $108 per barrel for crude. Madan Sabnavis, what is your sense? You saw the WPI numbers as well. Even they were above expectation. Administered gas prices will go up from April 1st, and the new formula is likely to be the formula-based increase is also likely to be higher. So what are your fears in terms of how much you may have to revise up the inflation number?
In fact, Latha, for fiscal 23, we are looking at an CPI inflation in the region of 5.5% to 6%. But I'm not quite sure if all this really matters, because finally, I think what matters is how the MPC looks at it. And